Many people are on the sideline renting versus buying because of today's environment with rising prices, insurance costs, and interest rates. So currently, we're entering a buyer's market with less demand. However, it's not price that prevents a typical buyer from moving forward, it's the payments that accompany it. And it's clear that interest rates have the greatest effect on mortgage payments. When looking at a $575,000 mortgage, there's a 40% difference in payment between 4% and 7%. Since realtors have experienced selling properties with historically low interest rates in a seller's market, they're stuck in the traditional way of structuring an offer, which is asking the seller for a lower price. In this example, the buyer makes an offer $25,000 below asking on a $600,000 home. Presuming a 10% down payment, the buyer will save $153 a month on the mortgage with the lower purchase price, barely a cup of coffee per day. The most strategic way to make offers in this current market is to offer asking price with a seller concession. This chart describes the maximum allowable seller concessions based on loan type and down payment. The money is used from the seller to structure an interest rate reduction loan called a 3-2-1 buy down mortgage. It uses the money from the seller concession and spreads it out over 3 years to lower the payments. It is structured so you get the lowest interest rate in the first year with a 3% lower rate, 2% for the second year, and 1% lower for the third, adjusting to the original rate from the fourth year onward. The 3-2-1 buy down is the largest buy down available, but buy downs are very flexible, so a smaller buy down can be negotiated depending on how much room is available on the property you're looking at. In this example, when using the same $25,000 that was being reduced from the purchase price in the form of a seller concession, you can see the monthly savings is over $1,000 a month in year one, with the total 3-year savings averaging $687 a month. And when comparing the traditional structure versus the interest rate reduction, it shows the monthly savings difference is over $525 a month. So, is it better to wait or buy now? The fact is that most people in South Florida are currently in a holding pattern to buy a home. And those that can afford to buy a home are renting, which is clearly shown by looking at the increase in prices of the luxury rental markets in Miami and Fort Lauderdale. But history often repeats itself, especially in stocks and in real estate. Buying real estate in South Florida over the course of time has been one of the best investments you can make as prices have continued to trend upward in the Tri-County area for several decades. And even the entire U.S. housing prices have followed suit. You could have bought a property anywhere in the country and made a huge return over any given period since 1980. And when looking at interest rates over that same time frame, you'll see interest rates have trended downward since their 1980 highs. So, the moral of the story could be that the price you lock in on a property is permanent and has been on an uptrend for several decades, while interest rates will always be temporary and have been on a downtrend during that same time frame. Using creative strategies can be a perfect opportunity to lock in a home price today, while using an interest rate buy down as protection in a constantly changing interest rate environment. My goal is to educate potential homeowners who deserve to have all their options available when they start to actively pursue home ownership. So if you find this to be an interesting approach to home buying, reach out and we can go over these strategies along with other ways to minimize your out-of-pocket costs to buy a home now. And I look forward to making the process of buying a home a favorable experience, even in a challenging environment. Thank you for watching and listening.